All right, boss traders. Next up, we're going to be talking about trend lines. So you guys might have seen me using some horizontal trend lines in some of the previous videos when we talked about support and resistance. And this time we're going to talk about those, and we're also going to talk about just regular trend lines. So the first thing you're going to want to do before you draw your trend lines is determine if the asset you're looking at is making higher highs and higher lows, or lower lows and lower highs, right? So I'm looking at the total market cap here for cryptocurrencies. And if we can see here, the market was previously making higher highs and higher lows. And over the long term, right, this still making higher lows and higher highs, right? But in this whole period, you've really got lower highs and lower lows. Okay, does that make sense? So once you determined whether you're making higher highs and higher lows or lower highs and lower lows, depending on that, you can connect a line between the swing lows and a line between the swing highs. So I'll show you what I'm talking about here. Right? So we'll start with the swing high from the top of the initial, the massive wall we've got here. Okay, so we'll start with the top of that. Now, one thing to note about trend lines when you're drawing them is that you want to be consistent. So what I mean by that is people will either draw from the wicks to the wicks of candles like that, or they will draw from the candle close to a candle close like this, right? So from this close to this close right here, right? You want to make sure that you're not cutting that candle out. You don't want any closes outside the trend line, right? And if we remember from candles, for a bullish candle, this is the open and this is the close. And for a bearish candle, this is the open and this is the close. Okay, so you can have a situation, trend line like this, where the close of the bullish candle is inside under the trend line, and you might have an open that's outside of it. So it's okay to have a gray candle or a red candle be open and outside the trend line. But you don't want to be constantly adjusting just to fit your bias, right? You don't want to be using like a candle, like the wick of this one to the candle of this one, just because it makes a trend line that looks pretty, right? You want to be consistent. So I don't think there's a right or wrong one. Personally, I like just using trend lines based off the candle closes. I think that avoids a lot of noise, right? Because you can get some really, as you can see it here, you can get some really nasty wicks. And I think closes do a really good job of catching most of the trend, right? Another thing you want to be consistent with is your time frame, because I could draw this trend line here on the weekly, and you need at least 2 points, right? You need at least 2 points to have a trend line, right? There's the first touch. There's the second one, right? And if we extend this, look at that, right? Look how this is November 2013, and all the way over here in November 2015, you get rejected at the same trend line, break out, and then retest it, and you rally massively all the way up to that horizontal resistance. Right? You guys see that? So trend lines are arbitrary because we're just, they're not truly there on the chart, but as you can see, charts often do, react to them. Okay. Let's get got another example over here. Did I delete it? Yeah, I'll have to redraw. That's okay. Oh, but the note I was going to make about the time frames is, right, your weekly candle closes might be in your trend line, but you might be, like if we go to the daily and see this, right, now we get a little different picture. Now we actually have a close outside of the trend line and multiple up here, right? So based on the daily, this trend line is not proper, right? The daily trend line would have to be from the swing high here, this close, to the swing high here of this close. And at that point, you get tons of fake outs, not really any good information from it. It's not really that great of a trend line, right? So you can see if I drew this just on the weekly and I was trying to trade on the daily, that trend line is not really that valid. It's still valid based off the weekly, so it's still valid for this asset class, but you definitely want to be consistent with your time frame for these trend lines, okay? Right. And you want a solid understanding of trend lines because that's key to understanding chart patterns and continuation patterns and all that kind of stuff, which is coming up in the next video. So you're definitely going to want to know how to draw some trend lines. So I would just pull up a chart, identify, what's my asset doing? Higher lows, higher highs, lower lows, right? Lower highs in price is going down and making lower highs and lower lows, all right? So I'm going to be connecting the swing highs and then connecting the swing lows, right? Right. So we'll take the close here, the close of this candle. We'll connect to this one, the close of this candle. That's a pivot low. We'll see if we get anything from it. And it looks like on the third test, you just go right through it. So I'd say that trend line's not really giving us any good information. It doesn't look like the market really reacted much to this specific line. So maybe that one's not that important. So we'll try starting with the same pivot low, and we'll use this one, right? We'll use this low as the other one. And you can see price never comes down and touches it, right? Whereas if we pick one up here, all right, and we don't want, remember what I said, this is okay for a trend line, right? This is the open of the candle. The top of a bearish candle is the open, and you just want to make sure your closes are inside the trend line. So that is still valid. That's valid. That's valid. All right? And you can see another example of a breakout and retest, right? Now, personally, I do not use a lot of charting patterns or angular trend lines like this. I'm a much bigger fan of horizontal support and resistance. That's just kind of what my trading style is suited for. Stuff like this, where you've got a pivotal lower high here, price comes up, gets a close above that, and immediately gets rejected. That's a pivotal high. Just another pivotal, just like these were pivotal lower highs. That's the same pivotal lower high. And then you break out above this horizontal trend line and you retest it, right? You guys know what that is. Resistance, turn, support, right? Potential support. But after it moves away from it, it's confirmed, right? And then if we were to put horizontal trend lines, this might sound kind of familiar because it's pretty similar to the support resistance video. But if we start putting trend lines on all the pivot lower highs on the closes, right, we can see just how many times, like look how massive the breakout was above this resistance level. And then you get one close above this level, immediately rejected massively. I mean, that was what? That was a 23% drop in a week. It's pretty big. And then when you finally get back above it, you get one more retest on this candle and you just never come back, right? You do retest this though one more time, right? See that right here? So for horizontal trend lines, I often will watch wicks as well. But again, the major focus is definitely on the close. And you want to try and remain consistent as often as possible. Okay. So another thing to note, like I said earlier, you need at least 2 lows or highs for a trend line. And a third touch is often what leads to the largest reaction from price. And then the fourth or fifth typically are the weakest, right? Let's see if I can get a good example of this. I had a trend line drawn earlier, but I deleted it. So we'll start from, I'll show you guys where I'm starting from here. I'm going to do the pivot low, close right here. Could also do this one. Either one works. And then we'll start testing out some trend lines here, all right? That looks like a no-go, nothing significant there. Maybe we line up along here. Oops. All right, so we got one touch there, one touch there, one touch there, one touch there. right? So that's several touches right now. That's a valid trend line. Now, if you guys don't know on TradingView, instead of just drawing this all the way out, you can go up here to the fourth little box over, and you can click the extend button, and it'll just shoot your trend line all the way out. Right, so here's an example where perhaps this fourth touch, you had one touch here, a second touch in there, a third touch. Perhaps this fourth touch is a weaker bounce to another lower high, right? Something like that, perhaps, right? Because the more bounces you get, typically they get weaker and weaker, right? And we can look at Bitcoin, and we can see this on. We'll go with the daily this time, because we're looking at a smaller time history, and we can see, if you guys don't know about what Bitcoin did in 2017, right? It went up pretty much 10 times from $200 in 2016 to $2,000, $3,000, right, in 2017. And then it just it kept making higher lows, higher highs, right? Typical bull run market. And then every time that it made a higher high, it would come back and retest the same levels, right? Make a higher high. That high gets retested. Make a higher high. Gets retested. Another higher high. Gets retested. Another higher high. And this was the first higher high, the 5,000 one that did not get retested. Okay, and this is pretty important because we're looking at the dip that came after breaching this high, which are these dips. And we're seeing that the buyers were so strong that they didn't even get back to previous resistance, right? So that's pivotal, because what happened after that was price rallied. Oh my goodness, I had the lock tool on. Price rallied 200 to 250% after that. So this low before that is really pivotal. And we can see, if we take that close and draw a trend line, we can see how price interacts with it multiple times. And the break below it was nasty. And so I think it's incredibly likely that you have a horizontal trend line here, support, and now potentially resistance on the way up. All right. And I like these support or these horizontal trend lines. I find them to be a lot more reliable than, say, like this trend line we were using earlier. But you guys can see just how accurate these can be. Even the angular trend lines can be really accurate. 1, 2, 3 touches, breakout, retest, and now perhaps this market's just coming down to retest. Who knows, right? I'm more focused on the next horizontal support levels, which again, I don't focus on, like, you know, if this was the support level, I'm not putting a buy right there, right? I will use laddered bids. That's why you'll see us using rectangular boxes a lot. I'll use laddered bids and maybe have like 4 bids, right? I'll have one at the top of the box, one a quarter of the way down, one, 2/3 of the way down, one at the bottom, something like that. Because these are areas. And like you see here, this all-time high, if you were just had one buy there, you didn't get your chance. You would have missed out or had to FOMO in much higher. Whereas if you were focused on, yeah, I'll buy in front of 5,500, then you'd be just fine. You would have had some bids, all right? So that's why you'll see me focusing on horizontals a lot more. But if you guys want to start trading with chart patterns, stuff like that, you're definitely going to want to know about trend lines. So I would just, here's one of the favorite things I like to do, because whatever you draw, your mind is going to start trying to confirm that it's real, like confirm your bias. So I like to go and do a little practice. Just hide your candles, get your trend line ready, and just start drawing some lines. Like just draw like I don't know, however many you want to draw, like a dozen or something, or 8, whatever you want to do. And go back to your cross tool, bring the candles back in, and just watch as your mind tries to make some sense to these. These are actually absolutely terrible. So my mind is making absolutely no sense of these. But the point being, like, oh look, there's some support, and it's trying to hold it there. Oh, look at these fake outs over this trend line. Oh, look, it retested it here. Stuff like that. I mean, that was really some bad trend lines. But if you start doing this, if you just go to some different charts, go to Ripple here, hide the candles, and just start drawing some chart or some trend lines here. Like I said, when you bring these candles back in, your mind is going to start to look and see, oh, some of these are actually legit. Oh, wow, look at this intersection here. Very nice test. Oh, yeah. Oh, wow. Do you guys see? Wow, that's amazing. Oh, and look. Oh, just adjust to fit your bias. Amazing. Wonderful. Do you guys see this? Absolutely incredible. I think I'm using magic. This is one of a kind. Right, you guys getting the point? Draw some trend lines without the candles, and you'll start to see your mind's going to want to confirm your own biases. So that's why I was really trying to hit on be consistent with your candle closes, with your time frames, because you don't want to be like, what if you had imagine you have some really large wick here and you're trying to fit your bias by connecting a wick with the close instead of the close with the close. Oops. Just an example, like maybe price dips back down here. You want to buy a Ripple fan and you're like, oh, well, look, if I connect this wick to this close, then this is a perfect buy opportunity. When really you should have been being consistent and use close to close. And that would show you that you can actually get a little bit cheaper down at the second trend line, right? But this kind of leads into why I don't use them as much, is just because they really are arbitrary, whereas horizontal areas are not. They're there. Like, that is potential support. This is potential support. This was resistance, turn support, right? Like, that stuff, that's just what works for me. So that's what you'll see me using a lot more. But because I'm teaching chart patterns, I want to make sure you guys know how to use trend lines. That's why I'm going through here, right? So I would definitely encourage you guys to try out that little trend line example I was talking about there. Just pick a chart, your favorite chart, any chart, and just start drawing, right? And then do that like 5 or 6 times on some different charts. And then after you've looked and seen like, wow, I really am trying to fit my bias, then go in and start trying to see if you can pick out the key lower highs, right? See if you want to start, when you see a chart like this, you want to start being like, all right, I can see this is lower highs, lower highs, lower highs, lower lows, lower lows, lower lows, lower lows. All right, this was a key lower high. Boom, you broke it. Now you're making higher highs. But your longer term, you're still making the same high, right? That was the double top. And you're making lower highs, lower lows. And this might seem really fast for you guys, but you really want to be able to identify this stuff really quickly so you can get through charts as quick as possible. Not like you want to rush through them. You just want to be able to, cycle through them quickly. You don't want to waste time. All right. So if you guys have any more questions on trend lines, I'm going to talk about them more in the strategy section, but feel free to shoot me a message in the chat, and I'll see you guys in the next video. Cheers.